is crypto still in a bear market? Is the 4-year cycle intact, or are crypto cycles starting to lengthen? We've been seeing a lot of these kinds of questions lately, and we figured it was about time we gave you some answers. But first, a disclaimer: none of this is financial advice. This is purely educational content based on the best information that we could find. It's also important to point out that much of this information is based on the past performance of cryptos, stocks, interest rates, and other assets and indicators. Obviously, the past doesn't always predict the future, and the unprecedented price action that we've seen across almost every market over the last few years is proof of that. So let's start here. What's different this time around? Well, for starters, we appear to be entering a period of higher inflation. This is due to a series of factors including deglobalization and onshoring. If this is the case, then central banks are likely to keep interest rates higher for longer. This will make it harder to have the same levels of speculative investing that we saw in previous crypto cycles. This means less FOMO and more fundamentals, an environment where slow and steady gains is the norm. It also means that crypto could have some competition from other assets. For example, proof-of-stake cryptocurrencies could face competition from government bonds. After all, why earn 4% interest rates on a risky asset like crypto when you could earn 4% interest rate on a supposedly safe asset like a bond? Well, the silver lining to this cloud is that higher inflation environments will simultaneously lead to more demand for inflation hedges. This could be beneficial for cryptos that are considered to be inflation hedges, namely BTC. That said, this assumes that we are in fact entering a period of higher inflation and higher interest rates. It's possible, though, that this isn't the case, in which case the next crypto cycle will look similar to previous ones. This means lots of FOMO and less fundamentals, an environment where 100x cryptos are common. This ties into the question of whether the 4-year cycle is intact. For context, crypto is believed to follow a 4-year cycle based on the Bitcoin halving, which occurs every 4 years. The first half of the cycle typically consists of a bull market, and the second half of the cycle typically consists of a bear market. The last Bitcoin halving happened in May 2020, and crypto prices, they rallied like crazy for the next year and a half. If you look at the total crypto market cap, you could argue that previous crypto bull markets technically lasted until May 2022, when Terra collapsed. Logically then, the crypto bear market began last spring. If this is the case, then we're just over 1 year into the bear market and have another 7 or 8 months to go. Lo and behold, the next Bitcoin halving is expected to occur somewhat between next spring, which is roughly 7 to 8 months from now. This begs the question of if the bottom is in, and the answer is likely yes, at least for Bitcoin. That's because BTC's price tends to bottom a year after the previous cycle top. Well, Bitcoin hit an all-time high of just over 69K in November 2021 and fell to around 15K in November last year. Even so, this doesn't mean that Bitcoin couldn't crash again or even retest its November lows. That's what happened in March of 2020 when Bitcoin suddenly fell back down to 3K due to pandemic market panic. We could see a similar phenomenon for other reasons in the coming months. However, this assumes that the 4-year cycle is still intact, something that by no means is guaranteed. For starters, it's believed that market cycles start to get longer when investment and adoption grows. And there is no question that crypto has seen lots of investment and adoption in recent years. The caveat is the absence of reasonable crypto regulations in major jurisdictions like the United States has made this investment and adoption more difficult, at least for institutions. In fact, the absence of such crypto regulations could be one reason why this crypto cycle will be longer. That's simply because crypto will not see the inflows it needs to hit new all-time highs until crypto regulations have been passed and implemented. Although this has already happened in some jurisdictions in Asia and the Middle East, North America and even Europe are still far behind. If you watched our video about Operation Choke Point 2.0, you'll know that crypto regulation in the US might not be passed until after the 2024 election. Realistically, the earliest that crypto regulations would be passed in the US would be sometime in early 2025, almost 2 years from now. While the EU did manage to pass a groundbreaking crypto bill earlier this year, most of it doesn't come into force for another year or two. Not only that, but there have been calls for additional crypto regulations to be implemented, especially when it comes to certain crypto niches like DeFi. This relates to the question of whether crypto is in a bull market or a bear market. The honest answer is that nobody knows. When you combine this with the fact that it's only been a year and a few months since the crypto bear market began, it's easy to argue that crypto is still in a bear market. The good news is that we're near the end of it. The bad news is that crypto prices could still go lower before it's over. This ultimately depends on what happens with all the other assets out there, namely stocks, bonds, and the US dollar. For those who don't know, crypto is highly correlated to stocks, particularly tech stocks. In case you missed the memo, tech stocks have been on an absolute tear since last October. This has probably contributed to the rally in crypto, and the reason why the correlation seems to have broken down in recent months is likely regulation. As Guy mentioned on the main channel, institutions still aren't comfortable investing directly in crypto, even though they're reportedly bullish on it. In any case, bonds and the US dollar are where things get interesting. Bonds have been taking a beating since 2020, and the result has been higher long-term interest rates. In turn, these higher long-term interest rates have taken the US dollar higher. In contrast to stocks, a higher US dollar means lower crypto prices, because a higher US dollar often means that money is flowing out of other assets and into the US dollar. As Guy also mentioned on the main channel, bonds are one of the only assets that haven't rallied yet, and they continue to be heavily shorted by hedge funds and billionaires. From a contrarian perspective, this means a rally could be imminent. The scary thing is that a massive rally in bonds often occurs because other asset markets are crashing. The fact that bonds are itching to rally could therefore be a sign that market volatility is imminent. In other words, stocks could be about to crash, and this could drag crypto down with it. Funnily enough, implied or expected volatility in both stocks and crypto has fallen a lot in recent months. Like the bets that bonds will continue to go down, bets that volatility will continue to go lower is a contrarian indicator, suggesting that the opposite is about to occur. Volatility could be about to spike. If you want to get more content like this, be sure to subscribe to the channel and ping that notification bell too. And of course, don't forget about our crypto deals page. Discounts on hardware wallets and exchange airdrop bonuses of up to $40,000, all in the description. My name is Jessica. See you all next time.